Hello, it's Bobby Bowers, Smith Travel Research, Senior Vice President, been with the company since '95. It's good to be here. You know, we've seen some really significant growth in terms of room demand, especially in 2010, and that's again kind of a function of how badly that it was damaged, I guess, or went down in 2009. You saw this really huge snapback, which really was the biggest demand growth that we've tracked since STR has been around in '87. And now what you're kind of beginning to see from the demand side of things is things beginning to kind of moderate a bit. Good growth continues, it's just not as good as it has been on a percentage basis, and that's essentially just because of the fact that the comparables are so tough now. And I think that as we go through the balance of 2011, what you're going to see is that you're going to see demand growth moderate as the comps continue to be tough, and kind of what we'll hopefully get out of that is we'll get more RevPAR growth from ADR. At the beginning of the comeback, occupancies demand really drove RevPAR growth, and now, especially at the upper end, what you're beginning to see is a more equal growth rate, I guess you might say, in terms of occupancy and ADR. And you're also beginning to see that premium that luxury has in terms of room rate begin to expand again over upper upscales. And I think that's probably going to continue to happen throughout the balance of 2011. When you look at the upper mid-scale group, when you look at the mid-scale group, their RevPAR growth is still being driven by occupancies. I think you're going to see that change over time as we move into the latter half of 2011. Transient occupancies are really back, and they've been back for quite some time now. When you talk about group occupancy, it's not back, and I don't think it's going to be back for a while. It's coming back, but it's coming slowly. And you know, the discounting and the fact that basically just higher rated travel was just not there as much really kind of drove that inversion where transient rates actually for a time kind of dropped below group rates. And now that's beginning to kind of change too. You're beginning to see that transient rate kind of come back up again. And I think we'll probably see that transient rate get back to where we were, say in 2007, faster obviously than group rate will be. I think probably what will drive the recovery more is probably the corporate side of things. And the reason I say that is because I just don't think leisure travel was really impacted as hard. From the corporate perspective, that spigot was just about, you know, shut off. I mean, not completely, but it was really constricted there. When you look at the forecasts, I know that we've always talked a little bit about kind of this as a top-end recovery, and again, that's kind of got to do a little bit with the math of the downturn, because if you look at the chain scales in general, the upper end of the market, luxury, upper up, and even upscales, really kind of focus more on the corporate side of things. Rates are higher, occupancies are higher, and they tend to be much more volatile. When things are really good, they blow doors. When things are bad, they get hit a little bit harder than, say, the middle to the lower end. So when you look at what's going to happen, at least what we think is going to happen for 2011, you're going to see more growth rates at the upper end, the luxury, upper up, and upscale. And again, that's kind of because they've got a lot more ground to make up.